Hey everyone, it's EdWhite1 here with my February market update. I wanted to start doing these quick monthly videos to share what I'm buying and selling and just my general thoughts on the market. If you're new here, my approach is pretty simple. I like to dollar cost average into exciting tech like biotech and crypto, but I also look for big established companies when I think they're cheap. Think Meta and Rolls-Royce back in Q4 2022. Classic example of buying solid companies when sentiment was low. So let's jump into what I've been doing this month. Firstly, what I'm buying, and the first one is Johnson Matthey. This one caught my eye because it's trading at a lower valuation than usual, and it's got some really interesting exposure to the green transition, particularly with hydrogen. The market hasn't been too excited about it lately, but I think it's one of those that could see a turnaround. The chart looks oversold, and the RSI on the monthly is right at the sweet spot where I like to start building a position. And next is Sibanye-Stillwater. Since I'm picking up JMAP, I thought Sibanye-Stillwater made sense too. They're a big player in precious metals, including the ones needed for EVs and hydrogen tech. The stock has taken a bit of a hit because of some legal issues, but to me, that just screams opportunity. Again, it's sitting at what looks like a bottom on the charts, and I think over the next few years, demand for what they produce is only going to go up. And my third one is Neste. This one's in the renewable energy space as well, and I've been watching it for a while. It's been under pressure lately, but long term, it's in the right sector. I also like that it's got strong fundamentals, good cash flow, solid management. The market's just not pricing it well right now, especially very recently, even after I bought some. So I'm stepping in and picking some more up. Next up is Bayer, classic case of a beaten down stock that's just too cheap to ignore. The P/E ratio is low, sentiment is terrible, but it's a huge company with really strong assets. These are the kind of situations where if you get in at the right time, you can make great returns when the market stops overreacting. Next up is CVS. This one's more of a defensive play. The healthcare space has been weird lately, but I think CVS is undervalued. They've been expanding their services, and I like where they're heading long term. The price is down, and I'm happy to take advantage of that. Next up, close to home in Europe, is Volkswagen. It's been underperforming compared to other automakers, but I think VW is one of the strongest players in the EV transition. The stock looks cheap, and I think there's a good chance that the market starts to appreciate its position a bit more over the next couple of years. And then also we've got Riskified. It's more of a high risk but high reward play. They're in e-commerce fraud prevention, and that's a really growing market, especially with AI. It's a bit speculative, but the valuation is reasonable in my opinion, and I like the growth potential. So moving on to what I'm selling, I've held Ericsson for a long time, and I've trimmed some of my position here. They're facing potential tariffs in the US, and the last earnings report wasn't great. It's not a company I want to exit completely, but I don't love the risk at this price. Next up is Apple. I sold a bit of my Apple stock. I've held it for a very long time, not because I don't like the company, it's still one of the best out there, but just because it's a case of taking some profits. The stock's been strong, and I'd rather deploy some of that capital into other things that I think have more upside potential right now. So how does this all tie into the market situation right now? Obviously, there's a big macro picture going on, and one thing I'm keeping my eye on is the new Trump presidency, of course. He's not exactly the biggest fan of green energy, so that could shift the investment landscape. Things like subsidies for EVs and renewables could get cut back, which might weigh on some of the stocks in the short term. But I think they've already been priced in, and long term, I think companies like JMAP and Sibanye are still right in the right place. They just need to be selective on entries. On the other side, traditional industries, big pharma, even oil and gas might actually do better under its policies. That's part of why I'm leaning into undervalued blue chips like Bayer and CPS. So for my final thoughts, that's my portfolio update for February. As always, not financial advice, just my personal thoughts. Let me know what you think in the comments, and if you're on eToro, feel free to check out my profile, EdWhite1, and same over on X, eToro_EdWhite1. Thank you.